Well, for an idea of what Brazil may look like under their new female president, I'm joined now by Richard Segal. He is an emerging market specialist at Knight Libertas. Thank you very much for joining us today on The Pulse. Brazil, this is a woman president who wasn't widely known even inside Brazil before this campaign, but she was the anointed successor of the very popular Lula da Silva. Is that what really got her through?
Yes, that's correct. Whereas José Serra has been running for president seemingly almost as long as Mr. Lula, who himself had been running since 1981, she is relatively unknown, but she quickly became the standard bearer within the Labour Party and therefore quickly became the odds-on favorite to win.
And so are we expecting her to continue the policies of her predecessor, or is she her own woman with different ideas?
For the most part, yes. Brazil has to be run as a coalition. She doesn't have too much opportunity to do things her own way, even though she's less of a consensus builder, more authoritative than Lula was. However, you can't run a country as big and diverse as Brazil authoritatively.
Now, alleviating poverty has been a mainstay of that leader. Are we likely to have some concerns about overspending with all of that?
Well, there's certainly been a lot of overspending leading into the election. This is nothing we can blame Brazil in 2010 for. We see this in Brazil in every election.
And indeed elsewhere.
That's correct, many other countries. So the main objective is going to be trimming back that excess in public spending, which could help alleviate what's happening in the foreign exchange markets to some extent.
Let's talk a little bit about the foreign exchange markets. We've got this weaker dollar. What effect is that having?
It has a pretty severe effect on Brazil because it competes with the U.S. and many other emerging markets, and countries such as Argentina have been controlling their exchange rates, so they do lose a lot of competitiveness. It doesn't mean that the economy can't grow. It is growing very rapidly, but it does hurt exports, and exports are one of the biggest engines of growth.
And what about investing directly in Brazil? Is it a good place to invest right now?
It is. However, you have to be careful because taxes continue to be imposed. There's a 6% tax on fixed income investments. It's the easiest way. It's also the easiest way to tax. So it's much better if you're a foreign direct investor or if you're looking at the equity market.
Moving on to talk about Argentina, you mentioned there briefly. What is the situation in Argentina right now for foreign investors?
Well, with the untimely death of former President Kirchner, things are quite up in the air. However, and even though the election for president is a year from now, it does seem as though economic policies which will be more market-friendly will be implemented.
Does it look more likely then that after that death that the opposition will win that election?
It does. However, we don't know who the opposition is because the Kirchners made so many rivals and enemies even out of their friends while they were in power for about 6 or 8 years.
And what about the default specter? I mean, has that gone away now after what happened with Argentina's default, or investors, or are the markets still a bit more wary?
For the most part, it has, but there's still about $6 or $8 billion worth of what we call in the markets untendered defaulted debt, which needs to be dealt with somehow. In addition, Argentina continues to be in default to the Paris Club of official creditors. So even though most of the debt in default has been eradicated, there's still well above $10 billion.
And is this a good time to be investing in Argentina?
I think probably is, because the landscape is going to look a lot better in the future. It may be just the green shoots of that we're seeing now, but certainly if we look ahead a year or two from now, it'll be much more market-friendly than it has been any time in the past 5 or 6 years.
Mr. Segal, thank you very much indeed for joining us.